All right, so I'm going to give you your weekly mortgage market update report. First on the docket is Jerome Powell's getting pressured from Mortgage Bankers Association, outside influence that it's time to lower rates, but he's trying to look strong. He started this thing out saying he was going for 2% inflation. We're in the threes. If I'm him, I hold tight. I can't look weak just because you're pressuring me. I'm still aiming for my 2% target. So it's likely that we see rates go up one more time this year. Federal Reserve raise rates one more time. We are seeing some signs of the economy starting to crack, which is what they really wanted. They wanted to weaken the economy. They wanted to put us into a slight recession so that they could correct the overinflation that's happened in the last few years. We're starting to see a rise in auto delinquencies happening right now. So because people are missing their payments and getting behind on those things, we're starting to see that the average American consumer is starting to feel the pressure of all these rate hikes, which is what they wanted. So I think we're close to a time when they're going to pause these rate hikes and start to trickle it back down, but I don't think we're there yet. I think Jerome Powell is going to remain strong. Right now, because of seasonality, because interest rates are in the low 8% range on a nationwide average, we're starting to see inventory levels tick up a little bit. I don't know about you, but I'll be happy to see inventory levels tick back up to 3, 4, 5 months of inventory on the market, get a little bit closer to a balanced market, because we have a ton of pre-qualified buyers who are just sitting and waiting and really can't find the right house, or can't find the right house, and that's coupled with the anxiety and fear of a higher than they expected mortgage payment because of interest rates. So I will be happy when inventory rises a little bit. So with that being said, let me show you nationwide average interest rates right now. 8.3% today are the nationwide average interest rates for no points on a conventional loan. Now, you know, we're brokers. With the click of a button, we can shop you with over 40 different banks. What we're seeing right now is that most people are paying about a half a point, or so to purchase the rate down. And with our rates that are typically an eighth of a point to a quarter point lower than the industry average, we're seeing about 7.875 as the best rate available today, with about half a discount point. On the VA side of things, or government loans, FHA, VA, USDA, they're all about the same. We're seeing 7.25%. So brokers are better considerably, than the 8.3% nationwide average interest rate that we have right now. Let me share with you a little bit of strategy here, right? As inventory rises, as inventory sits on the market a little bit longer, what if we, go back to telling our first-time home buyers or even our second-time home buyers, and educating them about how much better it is to buy than rent. There are headlines out there saying that, it's cheaper to rent right now than it is to buy, that your rent payment is going to be lower than your mortgage payment. And that may be true in some areas. It may be true in some of our areas, but that fails to reflect the fact of appreciation, the tax savings, the principal pay down that you're going to have over the course of, paying down the amortization schedule on a mortgage. So let's do a quick rent versus buy calculator, and let me show you a resource that you have available to you when you partner with us on any home that you need. So what I did real quick is I did a search on Zillow for homes for sale. This is in the Fayetteville market. This works pretty much anywhere. And I did for houses that are on the market for at least 14 days. And I'm looking for those kind of softer sellers that, would be willing to pay for some closing costs to help your buyers buy down interest rates. And I honed in on this property just because it was kind of in the median price point and, looked pretty sharp. So $249,000 buy calculator here, showing a $250,000 loan amount, 7.25% interest rate as if it's a VA loan. And it's going to show you that the principal, interest, taxes, insurance, monthly payment is $2,180. If they were to rent a comparable property in this market, it would cost you about $1,770 a year. But that rent is expected to go up each year. The Realtor.com put out a report recently that rents are expected to increase, every year for the next 5 years. So at the end of year 9, we're doing this on the average ownership length of 9 years, you'd be paying $2,800 a month for rent. And so the cash flow difference over those 9 years actually would save you $10,836 total, but that's not even the best of it. You're going to, on a 3.56% appreciation average, which I think is low, is conservative, you're going to see $92,000 gain in appreciation over the next 9 years. Amortization, the payoff amount, $29,587 over 9 years. The net gain by buying a house and holding it for 9 years is $100,000 to your client's net worth. And let's say, in our market, maybe people don't hold their houses as long. There's a lot of military that move in and out. Even if they only hold it 5 years, the cash flow is not going to be there right now because interest rates are high. You could rent for less per month right now, but the net gain still over 5 years is $36,000 to their net worth. So this is really, really strong data. If you need a report like this run for any property to help educate your buyers on, it's still a good time to buy. And what if we change that in a year to a 6% interest rate, and we go back to 9 years, the net gain is $132,000. So couple that with the strategy of aiming for properties that have been on the market for a little bit longer, where you could get them to pay some closing costs and buy that interest rate down. And buying still seems like what it is, a tremendous way to build wealth, through real estate.